I don't know if he did a screen share with the sound or if we're just hearing it through his mic.
Oh, I hate the...
That's okay. C'est la vie, kiddos.
There, I got you.
You know, we're going to be playing the air guitar here on Tackle Trading's halftime report here today. By the way, I did see there was like an air guitar band, playing on America's Got Talent a couple of years ago. I thought that was really interesting. Noah, how are you doing today?
I'm fantastic.
And Cody, young man, how are you out there in Hawaii?
I'm doing all right. A little tired, a little ready to be done studying, but it's c'est la vie.
Yeah, that's right. I mean, you got a big test for your job. Is that right?
Yeah, it's a chemistry board certification I got to take.
I see. Well, the market is interesting heading into the weekend. It's going to set up everybody's weekend with a lot of lack of clarity, in my opinion, because now we are in a very mixed pattern. Noah, is that a flag breakout right there? I know that we've got those pivots coming down.
It's definitely violated the downward channel. It's done so. The volume's been tapering a little bit, but it's above average volume. So make no mistake, that is above average volume. That's a lot of momentum. It's up there testing that 50 period moving average, poking its head above it, but it's hitting that next resistance zone. So at this point in time, Tim, it reminds me a whole lot of what we saw right back here in November after a two-leg drop in the market. Now, the two-leg drop back in October was bigger. Came a little bit deeper, but it still did the two-leg drop and then a hard rally right up into that resistance zone. So we're now, I would consider it range up. Doesn't mean it can't keep going, but I keep wondering if we're going to see a nice little profit-taking session here at the end of the day.
Yeah, I'm wondering about it as well. I mean, we're heading into a resistance zone, 2,900, and we're still 20 points away from it. You might even have a tighter pivot there, about 2,880. But the pattern, I mean, I think it's a really good call. It does remind me of that late October, early November timeframe. Now, the month of November was a tricky month to trade. Do you expect the same thing in June?
June historically is a down month. July is usually a ripper, but I wouldn't be surprised to see it, get a little whipsawy and volatile. I know a lot of this has been driven off of like rumors of the Fed's cutting rates and delayed tariffs and things of that nature. But the jobs report came out soft, which I think only feeds the Fed narrative. But I think, again, it's one of those things where I don't think there's a ton of long-term confidence with the current market condition. So I think oscillation and profit taking, I think we're going to see oscillation. I really wouldn't be surprised to see a pattern over the summer months look just like it did back between October, November, December.
Cody, what are you seeing in the chart on the S&P? Obviously, we have a big bullish day here today. Soft data out of the jobs number. It's kind of like that not so good news is good news because then the Fed's going to cut interest rates. It's a weird economic world we live in, but that's not new, by the way. We've talked about that many, many times. From the price action alone, Cody, what are you seeing here in the chart?
From the price action alone, so if I were to take everything out of it and look just at this chart, I still need some confirmation of closing above that 50-day moving average. We're popping above it right now. So that's price action alone. Not price action alone. I get nervous when the market is rallying off of news that are all rumors and all the headlines use the word hope. Market up on hopes of Fed rate cut. Market up on trade talk or on hopes that trade talks will resolve. When you're building your market on a house of cards and that hope doesn't pan out, then I can see it sharply doing just like what Noah was saying, coming right back down. So I'm cautious on the overall market. I don't know which way it's going. So I'm going to play it day to day right now.
Some of the better performance percentage-wise on the S&P 500
overall market.
Retail names coming back up. Foot Locker's up today. Fossil's up today. Illumina is the top gainer, ILMN. Bring this chart up for a quick second here, Noah. Up 5.24%. Not exactly leadership with big names up here at the top in terms of the biggest performers. Breaking out, running, heading into resistance. See, these aren't tradable charts. Look at Activision up 3.3%. So some of the strength here today, ATVI, I'm seeing it from areas of the market that are neutral at best. And even something like Fossil, FOSL, that's up 3.83%, but it's actually in a bearish downtrend that's actually in a bearish rally. So I know there are some good, strong stocks, and we're going to get to those. We're going to talk about it. But a lot of times when you have a rally like this heading into the weekend, after a really bad month of May, Noah, it might just be short covering. It might be bulls coming back in to cover those shorts. What do you think? And you're on mute, young man.
I can only talk to myself when I'm on mute. It's important to know what to say when you talk to yourself, Tim. That's a true story.
I agree with that.
I think
you can talk to yourself, and then that other guy, the one sitting next to you. He's not really there.
Yeah. It's true. I think we got a combination of short covering and bulls entering the market, and it forces the shorts to cover. So initially you got profit taking, and I think the news lifts it up, and then it forces shorts to cover, and then that encourages bulls, and so bulls will buy in, and it forces more shorts to cover. So as the market rallies, it kind of forces the hand of the bears, because a lot of them go in, and sometimes they use leverage, and when it reverses, you can't tell the difference between those buying to cover and those buying to enter. So I think it's a combination of the two, and because a lot of it I think is short covering, I have less confidence in the rally in general. And like you said, Tim, I have seen a lot of stuff that's rallied, but a lot of it's been in bear retracement type patterns.
There's not a lot of great setups. There are some, I will tell you. I mean, take a look at PayPal. There are some companies that I do like the setup. So even as we're heading into a Friday, heading into the weekend, I'm seeing breakout here. A close above 115 to me, Noah, is very, very strong. You've got a 4-candle rally, though, into this breakout. Do you generally take new trades, swing trades, position trades heading into a Friday afternoon? What's your
usually Friday approach for me is shopkeeping. It's closing down trades. I'll add new time decay trades, but I don't like to add new directional trades on a Friday. That's usually when I'm cleaning up the portfolio, catching up on journals and bookkeeping and stuff like that. And just making sure you got your trades managed for the next week.
Cody, what about you? What's your take on direction into a Friday afternoon?
Close my direction.
Yeah.
And that's pretty much what I've been doing. I'm doing a little bit of it right now. If I have things, because I also like, even though it's just 2 days, I like 2 days of theta. So if I can close some of my directional trades and pick up the 2 days over the weekend of theta, I like that. And then on Monday I'll look for the next one and add back directionally. And one of the biggest things that it took me a while to really break is that FOMO of, well, what if on Monday I get out of a trade on Friday and on Monday it keeps running? Well, that's a decision that I've decided now that I've also had to go against me enough times that I would rather, lock in that profit on Friday, start my weekend knowing that, hey, I'm up, things are great, theta's working. Monday comes, if that stock keeps running, who cares? I'll go find another one. I'll find a different one. There's another setup somewhere that's probably better. So
yeah, I'm with you. There's many, many different setups out there in the market that are also getting ready for maybe next week's price action. I think we're going to have a slew of bearish retracements in this market, Noah. In fact, I can just anticipate the scouting reports this afternoon when we're talking. There's so many charts that were beaten up during May that are now coming back up the chart, that are be heading into some of those old support points and maybe pivoting lower. But let's stick with some bulls here for a minute. Look at Pulte Homes, if you would. We're heading into the summer. I know that you've done a lot of research on seasonality. Home builders
what's their symbol again?
PHM.
There you go. It's not often you stump me on a ticker symbol, but every once in a while you'll catch me, because every time I put a new ticker symbol in, I knock one out. There you go. That's a nice looking breakout.
Yeah. How do home builders tend to do seasonally around this time of year?
There's usually a little boon in the summer, and you see it pop a little bit, and then it slows down. There's a seasonality to it with warm weather, building, and people move over the summer because that's, kids out of school type of stuff. So you see an uptick in real estate in general during summer months. But does it always translate to the market? No. The best way to answer that question is to go back and look at you can look at the home builders indexes or the home builders ETFs and go look at 20 years of history, or do the seasonality on that. And if you pop on like the seasonal chart, you can get a pretty good read on what the average outcome is. You need to do it both ways. You need to look at the history, And then you can look at that seasonal average because, you want to see what happens when it goes good, when it goes bad, when it goes ugly.
Mm-hmm. There's not many stocks down here today, but there are quite a few that are grabbing my attention. Look at ANET, if you would, S&P 500 component. Diversified Computer Systems, $20 billion company, now breaking into some support, Noah. Now, when you're down 4.4%, the rest of the market is all up. It's not a good sign, and they had some news here, something with their cloud networking. They were kind of releasing some new product, wasn't well received by the marketplace. Give me a read on that chart, if you would.
That's a increasing low base and something you'll definitely learn about in the step system. It's got a bit of a megaphone pattern forming. And when I talk about the megaphone pattern, it's just, you can see, let me see if I can draw it out here.
Mm-hmm.
You get an increasing range this way, but you're also getting an increasing range. Man, woo.
Words are hard.
Words are so hard today. Increasing range to the downside. So it's like an alligator opening up its mouth. And this tends to be, it can be a continuation or a reversal pattern. It's kind of the opposite of a consolidation pattern, like a triangle. And you're seeing it's like a shoving match. Like it's like the volatility, the pendulum is swinging further and further. And so you see some bulls taking a run at it, and then it gets counterpunched by the bears. And ultimately, you don't know which way it's going to break out. In this case, the preceding context with the big drop down, the downward momentum, that big support zone, the test below support. I tend to favor this one towards the bearish side, but this can become a reversal pattern. And that means it would rocket back up and establish a new high out here. And that can be what starts an upward move. This stock's pretty sideways prior to all that. So, I mean, I don't have a killer bias on this. The fact that it's still below all the moving averages, on this one, I'm going to lean bearish.
Yeah, and I think Coach Mark would point out that red line right underneath it is holding that moving average. There's a bunch of different bearish retracements that I'm liking right now. Take a look at TAP, Molson Coors, TAP.
TAP. Full
or the Dow.
I've been short on TAP with a adjusted trade, and this little rally took all my profits, but now it's going to drop hard and give all my money back.
I do like that setup, Noah, and I've been trading this stock for a while now. It is looking pretty interesting. So you got bearish retracements. Lamb Weston, LW, if you would.
LW.
Just want to point out the stock picker nature of the market. You have some strength, you have some weakness, but it's not like the market. Even though the headlines are all going to say bullish, 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 bullish. Yes, it did have a very good week off of lows, but it had a very bad month of May. Lamb Weston, I mean, that's almost a perfect bearish retracement right there, Noah.
That belongs in a textbook. I've written a few of those. So that's a textbook bearish retracement. Big momentum to the downside, rally up on decreasing volume. And so, a couple of days up, the volume dips, and then you see that big selling candle come in. Mm-hmm. That is a big bearish engulfing candle in what they call the bear area up there near that 20-period moving average. So, yeah, that is good looking.
That is a good pick.
Some of the best stock performers for the entire week. Look at where you might be taking profits on some of these. AMD had a nice run this week. In fact, they were up, I believe, 13% alone. Tackle 25 dirty, sexy money component, one that we track and we like all the time here, Noah. If you're running into this 32 mark, but you have 34 old resistance, would you be taking profit here or trailing stop?
We debated about that. We talked about that a little bit in the lounge this morning, the trail stop versus the target. I tend to be a target type trader. Where I change the trade scale out, adjust when I hit my targets, but you also trail stops. So it depends on my intention here. If I'm a swing trader, I'm trailing stops, and if you trail behind candlesticks, you'll get stopped out on the reversal and you'll keep a nice gain. Mm-hmm. If you targeted, you're already out. So, if you put like a trail stop below today's candle, well, if you were targeting, you hit that yesterday. If it reverses and drops back below today's candle next week, you're in the trade for 2 more days for the same amount of money. But you never know. That might continue to rise and end up testing that 34 resistance a little harder. Mm-hmm. One of the secrets of the step system we were talking about the other night is you never meet a broke trader who learns to take a profit. Mm-hmm. Learn to take profits, learn to lock in gains, learn to adjust those trades, learn to trail the stops. Because otherwise, a nice pop like that all too often will come right back down to the breakout, and you'll see the profits go away quickly. Doesn't mean it won't keep going up, but that's why there's as swing traders, if you are a swing trader, you need to respect that swing, and that's range up.
I'll show you another stock that had a really, really good week. It's on our covered call list as well. NEM, Newmont Mining, if you would, and just blasted off here, Noah, in the last 8 days or so. In fact, one of the top gainers on the S&P for the week. Now, this one's a slightly different situation. You've got a dividend payer, consistent, good long-term cash flow company, and now you're at resistance. I think if you're an owner of this stock for the long term, this might be where you cover your stock and you convert it into a covered call. What's your read?
That's a pretty strong run into resistance. Definitely been driven with a lot of the other metal mining and whatnot stocks. Hard resistance, double top, triple top, range up. I'd be a profit taker here, just out of force of habit. And trail stops is fine, but you're hitting that target and you've had a good run. Look how many times on the chart it's run that much in the last year. You're there. I mean, that's about as big as a run as you get out of a stock like this one.
Yeah, move on to the Dow if you would. Let's keep working through the markets one step at a time, and let's talk about what's happening over there on the Dow. As I look across the board here for the overall week, best performer on the Dow is actually Dow Chemical, DOW, but it's not exactly a beautiful chart. Start with the YM contract, and let's just give this a read. To me, it feels almost identical to the S&P, except one very subtle caveat. And that is we are above the pivot point right now, Noah. In fact, we're above the moving average. Is the Dow stronger from a technical perspective than the S&P?
Boy, with it being above the resistance, that actually helps it. Still has that 50-period moving average to contend with. There still is an overhead resistance support zone. But the fact that it broke above that first pivot, that makes this an engulfing candle. If you pop that back into a weekly chart, Tim, there's your big bullish engulfing. That could be a strong signal, and it's hard to ignore.
Yeah, I agree with that. And I'm looking at leadership in some of the Dow components. Dow is not a good looking chart, but it did have the best week coming off the bottom. Sometimes the best performers actually were at the yearly low or something like that before they started rallying.
Wow, look at that, up off the bottom. This is the new reiteration of Dow.
Yeah. After they split it apart, they took out the DuPont and moved that into a different company, but the Dow's still on there. Chevron had a good week. They were breaking down 2 weeks ago. They now are back up in a neutral range. Look at Coca-Cola, if you would. KO took off, broke out, nice dividend payer, had a good run this week. It kind of shows you where some of the leadership on the Dow is. Beautiful looking chart. Apple Computer had a monster week, coming back from 170 all the way back up to 190. Now, pretty much every trader I talked to all week long was looking to short Apple on the bearish retracement. And that is to a man and woman that I was speaking with, as they were getting ready for it, or avoid it just because they don't short Apple, if they have a belief that it's just too fundamentally strong. Now that you have this candle today, Noah, it throws that bearish retracement pattern out the window for me. Explain that to our audience, if you would.
You bet. So bear retracement, let's kind of walk this back and kind of look at it from that perspective. So let's see if I can zoom in here and say, okay, look at it from the perspective of, the chart prior to when you're looking at the chart and you don't know the future, you only can analyze the current context. You had a big bearish sell-off and a lot of downward momentum. And then you see a rally in here a couple of days up, but the context is bearish. And so you see that little dark, candlestick there, the falling moving average, and you think, oh man, that's for sure looking like a bear retracement. Support resistance zone. It definitely looks like a bear retracement pattern. And so if you plan to trade with a trigger and a stop, and then you look at it kept going up, you never got triggered in, but those 2 extra candles up totally changed the perspective of the chart.
Yeah.
Like that doesn't feel so bearish now. That feels like it ran pretty bullish. And, the volume diminished a little bit. Today's is partial volume. But that creates that same kind of engulfing candlestick. You back that out to the weekly, and you're sitting on a big old fat bullish, not just a bullish engulfing, like that is just incredibly bullish. That wiped out 3 previous weeks.
Yeah,
of bearish, and that by the way, that's if you didn't pick that up, that's the second time we've learned that lesson of what a bullish engulfing candlestick really is. The reason we like bullish engulfing candlesticks for signals is when you get the bullish engulfing. It's because on the smaller time frame, you're seeing a big momentous move. You're seeing it wipe out the previous sell-off. So now that feels like a reversal. And even if it retraces a bit, you probably see it put in a higher low. And that just encourages the bulls.
I agree with that 100%. When you mentioned bullish engulfing, it makes me think of our new system, the STEP system. And by the way, if you're out there and you're watching right now, welcome. It's always good to have you guys. Coach Tim, Coach Noah, Coach Cody, all joining you on a Friday fun day. And let me ask you guys real quick, how many of you guys have started the STEP? Just put in the word STEP if you have started the STEP system. Let's start with that. Because there's some pretty good lessons on candlesticks in that first module that we released this week. And Noah, we're releasing that 1 week at a time over the next 6 weeks. You did a fantastic job on Wednesday night. I already talked to you many times after then, but I'm just telling you that publicly. You're amazing. I love the storytelling, love the webinar. Really good job. If anybody's out there and they're watching right now, they don't know what STEP is, give them the 30-second elevator pitch.
Oh, the 30-second elevator pitch is the STEP system. It's the practical application of swing trading. It is the learning to impose a little bit of order on the chaos of the markets through proper technical analysis and proper, swing trading technique with the right order types to control the risk. So you can pull the trigger with confidence when you get the confirmation on the trade setups, have the stop losses in place, just like the pros do, use the right kind of targeting techniques. And it's really designed to work, like I was saying in the promotional videos, kind of hand in glove with the scouting reports. It is the system we use that we base the scouting reports picks off of each week. And, each week we give you some ideas on what entry and exit and target criteria might look like. And then what we want is for you to have the same education and knowledge that we're using to base those recommendations, not really recommendations per se, but watch lists on. And it's that ability to go and say, okay, well, I know what to do with this candidate now. And it's 10 hours of training that teach you how to think, act, and behave like a swing trader, where it's a system that's been, tested, back tested, not only back tested, Tim, but we've been, applying these rules for years and years and years and years, and we've been refining them over the years. So what you have is a distilled system where you take all the trading knowledge of myself, Matt, Tim, Gino, Mark, just all the coaches. We've distilled it down into a concentrated swing trading system, practical application. That was a long elevator ride.
That was not the 30-second elevator pitch. It's like when I was in San Antonio and we got in the elevator, my 10-year-old daughter thought it was funny. She pushed every button all the way to level 19. And
I still do that. Why is that's not funny? I do when I'm getting out of the elevator.
Sweet Sammy, she also had her tonsils out yesterday, so she's been home in bed right now. So I've got nothing but, love heading her way right now. But when she pushed all those buttons, it literally did push my buttons. I had to practice some patience there, Cody. There's no doubt about it. And guys, I've just dropped a link in the chat. I want everybody to click on that link right now and then open up that page so you don't lose it, and then bookmark that page. The STEP system is a course I want you to finish, and here's the homework, all right? And somebody put this in the chat for me. Finish Module 1 this weekend. I want you to type that in the chat. Finish Module 1 this weekend, okay? Because on Tuesday, Noah, we will be teaching Module 1 in the Coaches Show. And one of the cool things that we're going to be doing in the STEP system is not just releasing the video-based course, but also tying it back into the live webinars that we're doing, right?
Oh, yeah.
Yeah,
absolutely.
All right, Disney. Let's move on to some other charts real quick. Disney.
Okay.
What a breakout.
If my son needs this chart, Tim, I'm going to need a couple days off to go to Disneyland because we made that promise. If this breaks out, we're going to Disneyland.
Yeah, you made it live.
Hey, you put that out on social media, that kid's going to I have to save for his therapy if I don't take him to Disneyland now. That is a nice breakout.
Yeah, I love it. I love the W pattern. We've been talking about it for a while. The bullish retracement back before earnings was so beautiful, just couldn't trade the earnings. Then even when the market was weak in May, Disney held. It played defense there at support. You had a breakout. You had trigger. You had confirmation. What a beautiful chart. And we do have some leadership on some of these companies. Home Depot. Home Depot looks great. I talked about Home Depot. The only debate on Home Depot is if you want to buy it now or you want to wait till it goes above 200. Bring that chart up for a minute because I do think that is a tough call in my opinion. Probably going to wait for myself till it clears 200 because I'm not in it yet. And I balked and I hesitated at that breakout yesterday. There were just better charts for me to trade. No, a break back above 200 though seems like it has some clear air there. What's your read on Home Depot?
Oh, it's a beautiful double bottom inverted head and shoulders type pattern. You got the W, you got it poking up to a new high. This is an example of the backside of a moving average or a backside of a trend line. Like if I were to, it's not just the moving average. You'll see this from time to time where if you can connect two pivot points like this, and then you draw that trend line out, sometimes you'll see the back end act as resistance. So that one's a little higher up, but that moving average does the same thing. It'll act as a support zone on the bottom, but then it can act as a resistance zone. And so if it runs back up into that 50 period moving average, or that's the 50 period.
Yeah.
It's, slowing down. I like it above 200. I like the bottom. I think because you're just breaking above that old resistance, Tim, the downside risk, I think, is not terrible. I mean, if it were to break back down below support, violate the 9 period moving average, you probably would say, okay, you missed time the breakout. But the fact that it's closing above resistance, I wouldn't have a problem taking above that candle high, which puts you right around 200.
I'm with you. All right, move on to the NASDAQ, if you would. NASDAQ 100. And the very first company we're going to talk about is Beyond Meat after we look at the chart. I have to look at this chart with everybody. But NQ, very, very strong. I mean, up 2.1% here today. Leadership across the board here, Noah. The NASDAQ, just like Apple, we saw it in the chart, it can make this tremendous rally. And by the way, this one candlestick changes the chart drastically, because you had a bearish retracement. Just think about what it would look like, Noah, if we had a red candle today instead of a green candle. So much of the chart dynamics have changed.
Absolutely. In fact, let's zoom in on that and make that apparent. So yeah, prior to today, it looked like a little bear retracement at that point in time, like, lower low, lower high, here's support. There's a small candle, kind of spinning top. You're thinking maybe it goes down, you trigger below that 200 period moving average, but boom, it then posts. Oh, didn't mean to do that. Let's go rescale that. Now that you got the breakout, that what was looking like a bear retracement no longer looks like a bear retracement.
Yeah, that's right. It does not look like a bearish retracement at this point because you have a 2% candle day on a big, big rally into the weekend on the jobs report with the anticipation that the Fed is now more likely to lower interest rates. We'll talk more about that jobs report when we get into the US dollar analysis. Kind of like to break down the economic data when I'm going through currencies. But the NQ here, man, I got to tell you, it's really fascinating to look across some of the leadership on the Dow on who did really well today and who did really well this week. We have big movers out of companies like OKTA. OKTA was one we brought up on the halftime report earlier this week. Just look at that little hesitation, run, and a move. What a rally, Noah. Probably easily at your first target here.
Oh, yeah. That looks like an absolute shuck then jive, reminds me of like a receiver juking their coverage. That popped out, retraced, and then ripped. That is definitely at a target. I'd be looking to take a profit, scale out, trail stops. Very strong move.
Really, really good week out of Lyft. And we don't look at this company very often without making fun of it a little bit. But now that you're back out of the earnings and the IPO here for several months, Noah, that's an inverted head and shoulders. A breakout above that resistance is tradable.
It is. In fact, this is what I would consider the textbook IPO pattern. Not always. A lot of times you see it rally at first, then drop. But you typically see it come down. The dust settles. It'll find a price point that it gravitates around, like 55. In this case, it looks like it's kind of oscillating around that. And then here, if it breaks above resistance, you're no longer in a downtrend. You've established higher high, higher low, higher high, higher low. You're already establishing, if it breaks to new highs, you've been in a minor pivot uptrend since the middle of last month. And it's, it's definitely lost that bearish look and feel, and a breakout above that, I think definitely would encourage the bulls to come in.
I would agree with that. And we do have to talk about Beyond Meat, BYND. They had earnings today, Noah, and just look at this. If you thought their run was over, it is not. 135.55. By the way, even on the intraday, a little hesitation pullback is run $7, $8 from a little pullback intraday on this stock that I saw this morning as a day trading opportunity. This has been an incredible mover. IPO'd at $45, ran to 85. Everybody thought it was going crazy. Then it pulled back and ran, and then earnings, right? The earnings are the big unknown. And then here we are. We're out 35% here today. I mean, what can you say about Beyond Meat?
Well, I would say take a profit and go buy some ribeye steaks.
Yeah, if you were in this,
Yeah.
We're talking to three men who like a good steak here.
Okay.
that's right.
Yeah. It's got that hangman looking candlestick to it after earnings. It looks like they actually missed their earnings announcement there. They came in negative at minus 14 cents, but they clearly are growth, and they're clearly forecasting strong growth. Big momentum up. That kind of trade, when you get new highs and new lows established, the way I approach this, Tim, is I break it down into the intraday chart and I go, okay, if it takes out the high, I'll buy. If it takes out the low, I'll sell. And, I watch for that initial kind of push shove where it establishes the support and resistance zones. So now you got clear highs and you got clear lows. And from here, it becomes a momentum trade. If you're trading that intraday, don't forget to lock in a profit or put in a trail stop, because gaps do fill. But there's a difference. You only really know in hindsight whether the gap's going to be a runner and or a common gap that fills. So at this point in time, it looks like it's leaning towards the runner.
Yeah, and I got to tell you, it was not a good week for every stock out there. Look at Tilray, if you would. They're up 7% right now, but for the week, they were actually down. In fact, if I'm looking at the numbers, they were down about 8% for the week. Volatility in the medical marijuana and marijuana stocks has been just crazy for some time. This was also, and I bring this one up back to back. I remember when Tilray IPO'd, it felt like Beyond Meat does right now,
Yep.
And I'm not saying they're the same kind of company, but I just want to point that out. You can have these parabolic moves with new IPO stocks without proven fundamentals, Noah, that go crazy, but let's not fall in love with something that does not have enough history or data outside of trading windows, right? Yeah. Tilray here has been in a downtrend now for almost 9-10 months, just bearish.
Yeah, and this is one I would have a hard time picking a bottom on. Just because it hasn't slowed down too much. I mean, it keeps making new lower lows. And, historically speaking, you got a lot of excitement, enthusiasm, from the low to the high, you're down what percent? I mean, what did it peak at? 300. I mean, the fact that it's back down at 50, I hope nobody here bought that 300 high. That's a big, giveaway after that. In fact, the chart gets so smushed down here, you got to get rid of the old data for it to even make sense. Looks like a bear retracement right now, kind of a bear flag. And again, I wouldn't go bullish until I saw that put in a reversal pattern and start to trade back up.
A couple of the biggest stories of the week were with Facebook, Google, and Amazon.
While we're still on this sector, real quick, go over to Cron because it's doing something a little interesting. So whereas we see a bear retracement on this one, Cron had a gap up into the 200-day moving average.
This here is a textbook 200-day moving average, double support, bottom, resistance, bounce.
Say that 10 times fast.
Yeah, say that is a textbook. You put that on a weekly chart, it's just a big, deep pullback with a bullish engulfing. Put that on a daily chart, 200-period moving average, W, poking its head up. If it clears these highs here, I think you got that's a bullish breakout setup. And again, now the sector may or may not have the strength to support that, but that is a good example of multiple catalysts to help push that price up.
Yeah, very, very different charts. A good call on that one, Cody. And by the way, this one's on our Tackle 25. In the chat, type in Tackle 25. And we've got so many resources over at Tackle Trading. If you're a covered call trader in your IRA, you should have reviewed that course and make sure you get those list of companies from the Tackle 25 list as well. This one's a dirty, sexy money stock because of the volatility, but I would love a breakout of that pivot right there. That does look really, really nice. Going back to the NASDAQ here for just 2 minutes, and Crohn's actually on the NASDAQ, but the biggest story of the week, and finishing my thought I was starting a minute ago there, was Google, Facebook, and Amazon. Potential more regulation or oversight from the Federal Trade Commission, and they gapped down on Monday, Noah. Literally, they've built back a lot of the price action on the gap. Not Google yet, though. Google gap down. I think a target 1100 on a gap fill here looks likely. Facebook gap down and maybe back up into that 180 zone. Do you think the market, well, I know that the answer to this, but can the market just shrug off that news and start rallying?
Hold on. You think you know the answer to it, but now I'm afraid I'm going to get that answer wrong.
The market can do whatever it wants.
The market can do whatever it wants. It's like the honey boo boo, do whatever it wants. There you go. It's that's a bear retracement in my perspective. Doesn't mean the market can't shrug that off and just run.
Mm-hmm.
You know, the how much does a FTC inquiry into that look, and they've got the authority to go in there and do that. That could really affect things, but at this point in time, look at the volume behind the news and the sell-off and the volume on the rally.
Mm-hmm.
I put more weight on that downside. Doesn't mean it won't reverse, but there's a lot of overhead resistance. I'd be looking for sell signals.
Yeah, I think Facebook, it's really interesting here. You might be early on a retracement since you're holding that 200. It's really interesting that it did gap down to the 200 and held it 2 days in a row on this rally. I see bearish retracement as well on this stock. Look at Google real quick, though. Google's a different pattern, in my opinion, because you gap below the 200. Now you're backfilling on a gap fill. I don't think it's ready yet. In fact, you don't want to get prepared on a short when you're up 2.19% on strength on the market. Market's currently moving higher, but a gap fill and then into a doji like next week, Noah, in my opinion, that'd be a wonderful setup to trade.
Oh yeah. I think it needs a couple days up in a doji, and then, I want to see that volume dropping. And I'd like to see the market indexes maybe showing a little sell pressure as well.
Mm-hmm.
But that's a good looking gap down. And I think that the gap, you go with that initial knee-jerk reaction, was probably an overreaction, but then the recovery, mostly profit taking would be my guess.
Mm-hmm. Move on to the RTY, the Russell 2000 contract, and real interesting action out of the rut lately. There's no doubt about it. Just an underperformer. And not the dollar sign. They took that index.
Sorry, I'm having a brain cramp.
That's all right.
I have not had nearly enough caffeine today.
Coffee. Bearish retracement coming back into some support, but really, I think it's still neutral. I just see a lot of risk in this chart. There's no doubt about it. But I also see some neutral action from a long-term perspective. Give me a read on the daily, give me a read on the weekly, and give me your analysis on RTY.
Okay. So definitely rallying back up into the following 50-period moving average. Big support resistance zone there at the 1,520 ballpark.
Mm-hmm.
That's been tested. Look how many times this price is tested back here in the past. Resistance, support, resistance, support, resistance. It's a big number for it.
Mm-hmm.
Back it out to a weekly time frame, and you got a kind of a bullish engulfing style candlestick on a pullback. There's, looks like there's a big support zone here at 1450 as well from the past, resistance, support. So here it is at support. So I look at this as neutral too. It's smack dab in between support and resistance. Drop it down to the intraday chart, Tim, and there's an inverted head and shoulders in here.
Mm-hmm.
And if it starts to break out, that can certainly push, the bulls a little bit. And I spotted that looking at the daily chart here. I could see that inverted head and shoulders shape. That could qualify as a higher low if it breaks up. Then it's got to deal with that falling 200 period moving average and a lot of overhead resistance. So I wouldn't say, I would stay with my neutral bias. And I would, I'd say from the, daily, weekly perspective, I can see where the bears can take over, and I can also see where the bulls might get a little bit of running activity out of it. But overall, I think you're smack dab in between big support resistance zones.
Public service announcement, in case anybody's not aware of this yet, brick and mortar retail has been in trouble. Some of the small cap companies that had the worst weeks here, Noah, look at GameStop, GME. Aye. So
this is one of those times, Tim, where I'm sad I capped my gains.
Yeah, I agree. Look at the gap, GPS. Okay. You'll see it there here.
I remember when the gap was the height of fashion.
1992, I believe. Yeah. You had about a 5-year run in there where the gap was hot. Look at ANF, Abercrombie and Fitch.
ANF.
I don't remember when Abercrombie was hot, but it was about the 2000s. Cody, that's probably more your time, right? Yeah, I can see Cody going to Abercrombie. Yeah.
Yes. Abercrombie or Hollister, even though it was always so dark in there.
you have so many weak companies in this area. And it's just a reminder, there's a bear market somewhere. In fact, I want you to type that in the chat here, guys. There's a bear market somewhere. And when we talk about stock pickers markets, there's always something you can do. Bullish, bearish, neutral. As you're looking at charts, there's something that's strong. There's something that's weak. That's why we always have a bulls and a bears team. Move on to the currency markets, if you would. US dollar index. Cody, what's going on with the Fed? What's going on with this jobs report? How did the market react to it? And what's going on with the dollar right now?
Okay, so the Fed has been hinting at rate cuts, which is just kind of a floating rumor. One of the members of the Fed, not Powell, not the Fed chair, had mentioned rate cuts in this coming meeting, and that's when the dollar first dropped. And then after that, Powell did state that he's willing to do whatever is necessary to help sustain the growth. Mm-hmm. Both of those indicate possible rate cuts this coming meeting 2 weeks from now, or a week from now, the 18th. So with those two happening, that started pushing the dollar down, because if rates get cut, the dollar loses some strength. Then today, the unemployment data, so the unemployment rate was unchanged, but the job growth for farm did not even come close to what they were expecting. And then the wages also missed. So we had two misses that show some economic weakness, which could actually lend an excuse to why the Fed would lower rates. Because the Fed should not actually be looking at the market, because the market and the economy are different. They look at, is the economy strong? Right now, the economy is strong. Most of the data coming out of the economy has always been strong. But now we have some data showing that, it's not as strong as it was 6 months ago. So all of that combined is what's driving the dollar down. And then one last thing, I looked it up, the blackout period is they basically told all the Fed members to stop talking to the media until after the meeting, because them saying these little comments and throwing volatility in, I read something about a blackout period for the Fed, but it was basically them telling the board members to shut their pie hole.
Shut your hole. Yeah, that works.
Because when you have Fed members who are stating things like this, it doesn't just move the dollar, it moves the market. When you have members saying, yeah, we'll probably cut this coming time, it's like, boom, bulls jump in, bears get slaughtered, and it's like, wait, what's going on? And who's to say we get to that meeting and they keep rates the same? If they keep rates the same, you're going to see an exact opposite reaction to what we just got recently off of rumor. So
when's the next FOMC meeting again?
18th and
19th.
A week from Wednesday, Tuesday and Wednesday. They hold the meeting for 2 days. Then they do the announcement on Wednesday at 2:00 Eastern. So a week from Wednesday, we'll get the announcement and then the press conference. They're talking about rate cuts. Obviously, the Fed is willing to do it. The market believes it. And with weak job data, just like Cody, and great analysis there, Cody, the market is bringing the dollar back down. It's benefiting other currencies in the short term. By the way, did you guys see Theresa May did resign?
She did. This was her last day.
Yeah. Pound dollar cross pair, if you would. We've been talking about these currency relationships for a long time. And by the way, if you're a currency trader, great. Check out those Forex reports every weekend from Tackle Trading. These bearish retracements that I'm seeing across many of these. Now, the risk here is with the politics and the news around Brexit. Noah, Theresa May, she's obviously leaving office for a reason. Not a very successful run as prime minister there, I would say, is fair analysis. What about you?
Well, it was a very heartfelt, tearful announcement. I think she had tried her best, but you got a lot of polarization going on. And I think trying to, pull off an exit from the deals like a Brexit, it's such a complicated thing. I'm not surprised they had kept postponing it.
Yeah, she literally had the cards stacked against her when she started. She basically had to make a Brexit deal when she took on the role as prime minister. And it was a matter of trying to fight for what the people voted for and fight against the politicians who have interest in keeping things the way they are. So she had I would have been surprised if she would have pulled off a a Brexit deal. I think it's going to be either be no deal or a hard Brexit, one of the two. I don't think there's going to be that middle ground that she was trying to go for.
Mm-hmm. Well, either way, maybe they can get clarity on actually what this pound is going to do. And by the way, I would love this bearish retracement in general, but if the dollar is going to weaken, the Fed's going to lower interest rate, and we do get some kind of leadership out there in the UK, it could be that the pound is ready for a rally here. It's going to be interesting to watch. I actually want to talk to Coach Keith about that and see what his analysis is on the pound now that Theresa May is stepping out and what they're going to be moving forward towards. Oh, currency markets, Noah, I do love them. The euro dollar cross pair, I was trading yesterday as a day trader. They had their event, though, news-based type trades. Dollar yen, there's a lot of volatility here. I'll show you one that's really, really good is the dollar CAD cross pair, USD CAD. And it is breaking down hard. It's now sitting on that rising 200 period moving average, 4 red candles sharply in a row. If the dollar index sells and the economy starts moving back higher and crude oil recovers, short dollar, long CAD would make sense to me. And then a quick peek at Bitcoin, if you would. BTC on the futures contract. And it is holding, Noah. Some would even call that, is that a little bit of a flag pattern up there? Not quite, maybe a retracement. It's got a lot of volatility. What are you seeing there?
Oh, man, I see Sauron in that show.
Hey, that's my line.
Yeah, that's what I see. Like, big old crown there. It's inside. It's in between the support and resistance. It's coming off the bottom. You got a, kind of a messy bottom and a messy top. And it's smack dab in the middle. So this is one where I would say the context is bullish, so therefore I lean bullish. But that's one where, man, I'd feel pretty confident buying above 9,000, which is weird. I have less confidence buying at 8,100. So there's some trader psychology for you. Feel better about buying it at a new high versus buying it, at a lower price.
Yeah, buy high, sell higher. I mean, that's mindset 101. Yeah. Yep. I'm with you. Although I don't have any confidence buying Bitcoin at any price aside from speculation money. I got to tell you that. I'm impressed with the chart. I'm impressed with the move. I'm impressed with the run. Bitcoin, I'm looking at this performance here, Noah. Let me give you an exact number. For the week, Bitcoin, BTC over USD actually was down a hair. For the month, though, Bitcoin had a 37% month. And year to date, Bitcoin is up 154%. It's been an incredible move here to the upside for Bitcoin. Can it sustain it through the back half of 2019? I think it's going to be an interesting storyline as it progresses and develops. And we're going to keep talking crypto because, quite frankly, they're markets that people watch and trade. And I love them. I think they're very fascinating. I know that it's a different animal than some of the other ones, but it is what it is. Moving through the commodities here for just a quick peek at all of these different ones. Start with crude oil. Hey, Gino. Perfect timing, Gino. We're talking crude oil right now. I know you are the crude guy. Gino, what's your analysis on crude oil?
Sorry, I just took that crude guy a different way.
Yeah?
Yeah.
You're a crude guy.
And no crude remarks real quick. Let me see. What do you got? The charter crude up?
Yeah.
Still bearish. Yeah,
it is. Yeah, it's not getting as much of a snapback here as the other broad indexes, Gino. In fact, we've been looking at stocks all day, obviously. And, the NASDAQ, the Dow, the S&P, they've all had really, really good weeks. Crude oil has not benefited from that. Any rally here is going to be met with some strong resistance, Gino. Would you sell crude short in here, or would you just wait for a bottom? Gino popped in, then he went on mute. Noah, what about you?
Oh, give me a second to breathe here, Tim. Let me see here. Tim, what do you think? Okay, back to you, Noah. Let me see here. I'm looking at the chart. It's bearish trend, Tim, so I'm waiting for a swing high.
Swing high.
I did sell naked puts in the low 30s, 40 days out on the crude futures, and loving it. Closed 2 of them today for a penny. I was selling them for 40, 50, all the way up to 70 cents. And closing them for a penny today on this little rally. The volatility drop. But yeah, so if anytime I can sell puts in the 30s, done deal, man.
Yeah.
So that was a good week and a half of selling puts on. So I would like to see it go back down, pick up some volatility. On the next swing high, I might sell some calls. I do have cheap call spreads in the 70s on it. And they're only $1 wide. And I got into those for $10. Okay. And why? Because there's controversy in Iran and stuff overseas. Anytime I hear about that, I buy out of the money spreads on calls. They're cheap, low risk. I don't even think about it if it spikes up. But the dollar is the big picture. You guys probably already went over that, right?
Yeah.
Yeah, we talked dollars a little bit here, but the dollar's down and crude is down. I mean, and I've been asking this question to pretty much anybody who we analyze this stuff with for a long time. Has crude decoupled from the dollar?
Yes.
Cody?
Well, it depends if it's news driven or dollar driven.
Mm-hmm.
Well, those correlations always break down for times. I mean, the correlations are a generalization, but the correlations break down, right? And then you'll get them where they're trading exact opposite. You can go something that's typically negatively correlated can all of a sudden become positively correlated. And you'd expect it to revert back to the original correlation. So with oil down, the dollar back down, that negative correlation is broken down right now.
Mm-hmm.
At some point in time, that negative correlation will resume. And I think, peak oil consumption usually hits again July. And if they've got, seasonal expectations for oil for the rest of the year aren't that strong, I'd expect to see oil continue to go lower. And then I'd expect the dollar, depending on what they do with rates, if they cut rates, that might soften the dollar a bit and you might see them both go in the same direction.
I mean, this rate thing, they're talking July, 79% on the CME rate watch. It's like, what? Where did this come from? I mean,
it's up to 79%. When I looked at it earlier in the week, it was like 25%.
Well, hang on a sec, because it changed again from today.
All right. So I literally was pulling it up as y'all were talking. For June, we're at a possibility of a 25% cut is what the possibility is for June. Let me see what July looks like.
Okay, now July's 68%.
Yeah, so there's a 68% chance they'll cut by 25%, but there's a 22% chance they'll cut by 50% or 50 cents.
How does the market react if they don't cut?
If they don't cut, I think it's coming down.
Yeah. Well, check this out. There's a 1.25 point chance by December. Really? Is the economy that bad where we have to drop at 1.25?
No, I'm with you, Gino. The thought that if the market isn't expanding rapidly on its own, there has to be some other body step in and do something about it, like the Fed.
Mm-hmm.
The Fed should not be adjusting rates just because the stock market isn't rapidly expanding.
No, I think it's a global outlook more than anything.
And when you look at historically what Fed rates have been, 2.5 is low. In the past, they've lowered rates to 2.5 to help stimulate the market. Mm-hmm. It's the fact that it was kept at 0% interest rate for 9-10 years, and people got used to having a 0% interest rate. But that's also one of the reasons that our currency and our debt and everything else has gotten out of hand. The fact that people are upset about having to pay an interest rate to borrow our currency is beyond me. I don't think we should ever have an interest rate below 2%. I don't want to get to the point where it's zero like the euro or negative like the Swiss or negative like
they had a chance to move it up faster when they were supposed to. Yellen had her chance. She had a window. She was way behind, about 6 months behind. Now they're wishing they were half a point higher.
Exactly. And this idea of, oh my God, we had some volatility, we had some pullback. Oh, the Fed needs to fix it. No, the Fed, the president, the trade deals, they all need to stay out of the market. Stop trying to adjust it whenever there's a bad day.
Good luck, dude.
Yeah,
I don't have a lot negative to say about our president right now. There's no doubt about it. I've been critical.
I love what he's doing, but I hate how anytime it's down and the headlines start coming out, the market's down, he will try to tweet, hey, deals are going great, trying to bump it.
Well, does anybody think he's doing those things for the true economic purposes, or is he just playing politics? I mean, it feels like he's using
politics. Is what it is.
He's using tariffs and trade wars and tweets, obviously, just to try to drum up political favor in his base, right?
The number one correlation between a re-election of an incumbent president is the economy.
Correct.
So that alone is the main thing that he needs to focus on, is continue to pound that the economy is good. And he also has to do anything he can to keep that economy good. And that includes the market, because most people don't understand the difference between the economy and the market.
Well, interest rates are going to be very interesting, no pun intended, but we got there anyway. As we move through the summer and through the fall, I mean, if the Fed does lower them, obviously the market can continue to ramp. If they don't, I think there's risk here, like you said, Cody.
Well, don't fight the Fed. That's the number one rule, right?
That is the number one rule. Don't fight the Fed. I can say I think the Fed's being stupid.
It's all about the global outlook. Watch the next meeting, because Australia and New Zealand hitting record lows on their interest rates, and the ECB and all the other thing going on. It's a global outlook they're taking in consideration.
Well, they've been talking about that for years. That's not new in June of 2019. It's not like all of a sudden now we know there's weakness in Europe. Coach Keith was talking about it 9 months ago when we were doing scouting reports. So why would that now prompt them to want to lower rates, Gino? I mean, what has changed globally that wasn't there?
Globally, it's like I said, New Zealand and Australia, record lows in history. Recently. So, and that's a tell-off from a spin-off from China and their business with China. So it's coming to where, okay, we can't be the only strong economy out there. It's going to bleed over to us. So they're foreseeing, hey, look what's going on outside. Once we open the doors, that weather is coming in. So
yes,
they're definitely, now if the globe with everybody else was getting stronger, I don't think we'd have this kind of a thing. But here's the interesting thing, Tim. Market rallying on interest rate hopes of going down, but that's because the economy getting worse. So what does that do to the market?
I was just about to bring that up, Gino, is the only reason to lower rates is to help stimulate a bad economy or a weak economy. So if they're going to lower rates right now, that would actually be a signal that our economy is weakening. That's not a good thing long term.
They did this back in the 90s.
What's that?
They did preemptive rate cuts in the 90s.
Yes.
And it kept the market running. So the whole, you're right about it being a reactionary. The fact that they're going preemptive, and they're trying to treat rate cuts as a preventative medicine. It's interesting because they kept them so artificially low for so long. I agree with what Gino was saying. They're a little behind the curve, but they're just trying to keep that momentum going. That preemptive cut.
Mm-hmm.
I don't fight it.
Well, behind the curve is definitely the statement, because the previous Fed chair and the previous administration should have been raising rates.
Yep.
They absolutely should have been raising rates.
Kid, you got to get with the times. We live in a modern world. They're going to
modern monetary theory.
Modern monetary theory. Pretty soon they're going to be giving you universal basic income. They're not going to make you work. They're going to give you free college education, free healthcare, and capitalism might be dead by then. I don't know where we're going here, obviously. I mean, they have so much arrogance and ego and hubris in the Federal Reserve policy right now, and everybody knows they should have raised it for a long time. But I got to tell you, people with a lot bigger, degrees than we have in economics, they think interest can stay low forever. And they're operating on these new theories. I think they're
the theory of negative interest rates. I've read about it, and to me, it's a pie in the sky. The world is perfect. Everything will be fantastic. Humans act rationally. We will all care about. We'll sing Kumbaya and things. No, it doesn't work. I'm sorry.
You're basically stealing from the future to pay for today.
Exactly. And that I can get on a rant, but we're almost out of time, so I'm not going to.
Kumbaya made me think of a camping trip. I'm going to plan one myself. Maybe we'll have a tackle trading camp out, guys. And we'll sit under the stars, talk Fed policy Friday night. Gino, sound good out there on the beach? Redondo Beach?
Yeah, man. I'll tell you what, though. It's going to be an interesting weekend for the scouting reports, because there's so many possible turning points here in the market, and it's going to be fun when we brainstorm the sectors and the direction and the trends today, because this is a hard one.
Well, I think it's a stock picker's market. I do. I think for the whole market, it is a tougher one right now on where the market is. But I do think there's a lot of good opportunities up and down. By the way, speaking of scouting reports, last week's report still had some great triggers here today. 2 triggers on the stock report, 1 trigger on the option report. And by the way, CCEP, bring this one up. And I got a shout out to Coach Noah. Noah, this was your big case study during the STEP webinar on Wednesday. And I got to tell you, ding, ding, ding.
Look at that. We've already adjusted the stops up. Those are the 2 trades we placed in the STEP webinar, so they're doing pretty well. And, just to put those into perspective, they're up $110 right now. So they were up a little bit more earlier today. Nice breakout. Again, it wasn't hard when you have a good scouting report. I did post a link to the replay on YouTube. If you missed the step system webinar, you can catch that. We've got it posted on YouTube. You can go watch it. And again, if you're not a member of Tackle Trading yet, you ought to be.
Well, and I think
scouting reports are awesome.
Yeah, and here's actually a good link on the website.
That was on the option report, the CCEP. I did a video on it last week, and guys, that was one of those trades where we never really traded the stock, and it's like a symbol you never heard of, and a textbook setup. Yeah, I'm moving my stop up on this one, guys. Right, you got it.
A lot of great performers on those reports this past week, by the way, guys. The bullish team just crushed it, and if you are a pro member, obviously get ready for the reports this next week and update your watch list, bullish, bearish, neutral over the weekend. But if you've not reviewed the step system, I just dropped a link in the chat. I want everybody to click that link right now. And it has the video that we did on Wednesday night. It is the mastermind group page for the step report, scouting report system. Go and watch that video over the weekend, and start that module 1 and make sure that you get that homework done. Gino, final thoughts here today?
Yeah, final thoughts is, I don't know if you already looked at it, Tim, but did you see also our waste management pick from last week?
Oh, man, it was beautiful.
And VEEV.
Yep.
I mean, those are some huge moves, guys. And we were not favoring the bulls, but we had bull picks anyway. Mm-hmm. And ICE, they look good. So tighten up your stops. It doesn't last forever. I mean, if you're bullish, tighten up your stops, let your winners run. But man, guys, check out the scouting report this weekend. It's going to be very interesting, our take on the sectors.
Well, Gino, off of what you just said, that's one of the reasons that we use triggers and we don't simply just, it's on the report, let me buy it.
So
and
true.
That if you set up, 5 bull triggers and 5 bear triggers and the market goes bullish and 4 of your bulls trigger and none of your bears trigger, you're happy. If the exact opposite happened and your bears trigger and your bulls never trigger, then you're happy. Just because, and learning the step system teaches you how to use the reports. Mm-hmm. Because I know some people have just seen it on the report and they're like, it's on the report, and they'll go buy it. And it's like, it never triggered. What are you doing? Stop, slow down, follow the step system.
Yeah, I love it. I'm excited about it. We're going to be releasing it 1 module at a time, week by week for the next 6 weeks. So finish module 1 on Tuesday in the coaches show. We'll be teaching module 1 and then get started with module 2. Every Tuesday, we'll be releasing the next module. So make sure that you're up to date on that first module. Noah, great job today. And any last thoughts from you, Noah?
Well,
one last chart. Give me Zoom.
I got one last chart. ZM.
Yep.
ZM.
We're on Zoom broadcasting live on Facebook, and I got to tell you, or on YouTube, look at these gap outs on these IPOs. Wow.
That's quite the pop.
Zoom and Beyond Meat have been incredible this quarter. Aye.
Was that earnings on Beyond Meat?
Yeah. Did you see that one? Zoom, Beyond Meat was you weren't here yet, Gino. Earlier in the day, we looked at Beyond Meat and these IPO, Gino. Bring up Beyond Meat again, Noah.
Unbelievable, right?
Unbelievable
how much it tastes like real meat.
Well, how do you have negative 16? You're not profitable, but you gap up. Look at that.
Full year guidance was reaffirmed, and they've got a bunch of new contracts, and it's all hype right now. Everybody's loving it. You know how that is. People have that FOMO going on, fear of missing out, when they read the news headlines every day, and Beyond Meat is up, and then it's doubled, and now it's almost tripled. What is that? 45 to 137, nearly almost tripled since the IPO price. That's incredible movement.
Reminds me of Krispy Kreme when they did that. And then all of a sudden one day you woke up and it was just slaughtered.
Yeah.
So you guys watch it.
Well, they weren't just cooking donuts. They were cooking the books too.
They had us glazed over.
Yeah. I'm a Dunkin's guy. Dunkin' Donuts is great for me.
Go back to Starbucks.
Yeah, Starbucks is fine. Yeah, all right. We are out, guys. A halftime report here on a Friday. We had some fun. We'll see you back here on Monday. Have a great weekend, everybody. Yes. Before you leave, make sure you give us a like and a share. And by the way, Cody, you almost dropped the ball on our Instagram. Jessica wanted you to remind everybody we have a new video on Instagram from Coach Gino on how he runs his day. So just go over to Instagram. Make sure you like our Instagram page and comment on Gino's video. Jessica Marinho will be very, very happy that I reminded everyone.
I did not get that memo to mention that. So I don't know where that ball is. It's not my court.
Well, I just kicked it right through the goalpost. So we're good, kid. All right, back to markets. We'll get those reports in Bird Doc for you guys over the weekend. Great job, Gino, Noah, Cody, and Tim. We are out.